Welcome back to my channel, Value Investors. In this video, I wanted to cover the news reported in the Wall Street Journal that DocuSign may be sold to a group of private equity investors and some technology companies. This is very interesting news, but not a giant surprise. DocuSign, I felt 2 months ago, was undervalued and was a good acquisition target. And the reason for that was that the company is growing their revenues. They're generating free cash flow. They have a lot more cash on the balance sheet than they do debt. Overall, it's just an attractive company to acquire, either as a bigger technology company to bring those revenues, those profits, and that cash over to a larger technology company, or a private equity group taking the company private, coming back 2, 3, 4 years later and issuing out a new stock. And hopefully that firm would want a larger market cap and they would make a big return. Overall, it just proves that there is value in DocuSign. There's significant upside value in DocuSign. I wanted to go through and evaluate, how much of that value is in DocuSign, how much it was unappreciated or discounted, and now how it's rising. All this is a value investor's pretty much recipe for success. Buy a stock that's unappreciated, undervalued, and then watch it rise in value. The DocuSign stock over the last 12 months has really seen a lot of volatility. The stock was at higher than $65 a share, and then it began this drop. During 2023, I noticed that a lot of small caps and mid cap stocks were going down in price while the Magnificent Seven just continued to go up. That was interesting. It actually offered up really good opportunities to a value investor, especially in the DocuSign example. Shares could have been bought in the low 40s. So it offered up value investors really good, attractive acquisition price. The last time I created a video for DocuSign was roughly around this point here. So the stock price was quite a bit lower. And ever since then, especially now that it was announced that the company may potentially be acquired, boy, the stock's really jumped up. In the last 10 days, it's up 33%. The last month, it's up 43%. So it's had a great month. And, overall for the year, it's having an okay year. It's not even keeping up with the S&P. But again, this is a value investor's recipe for success: is track a company, understand its fundamentals, understand where the value is, and then buy at the right time and be rewarded with a really good return. The stock continues to be undervalued, but not as much. There is some room between the current price and where I value the company today. I valued DocuSign 2 months ago on October 11th, and I updated the valuation on DocuSign today. I wanted to go over the two valuations and kind of show how quickly the company has gone up in market cap and in stock price, and what I estimated a couple months ago and what I estimate today, the value of DocuSign being. So first, the valuation that I had a couple months ago, I value companies based on cash flow and earnings per share. For cash flows, I started with the cash flow that I expect in the current year that they're going to produce, grow that by about 10%, which is what they've been growing at. It might even be a conservative number. And then long-term growth at 3% of those cash flows. Years 1 through 4, here's my estimation that I had previously determined. And then all cash flows beyond year 4 is in the terminal value, being 16.7 billion. The discount rate I used previously was 9.5, based on the interest rates that were going on 2 months ago. With all those factors, it discounts the net present value of the value of all of DocuSign is $13.6 billion based on free cash flows. I add the cash and take away debt to get to an equity value of DocuSign of $14.3 billion based on free cash flow. The market cap 2 months ago was $8.5 billion. The stock price 2 months ago was $42.23, but I had a value per share of 67. So it offered up a 59% discount based on free cash flows. Earnings per share, the company's doing really well. Their earnings per share are really good. And they have the next 4 quarters, I expect that they're going to do about $2.55. And again, this is 2 months ago where I was looking ahead 4 quarters. I'm putting a PE of 28, which is very reasonable. This is a growing technology company in the cloud business. So all the right things to have a PE of 28. And based on those factors and a growth rate of 5%, I estimate a value of the company at $53.41 based on earnings per share. Again, the company 2 months ago was being traded at $42 a share. So they're actually discounted by 26%. We looked at earnings per share. I blend the two, free cash flows and earnings per share, but I put more weight in the free cash flow method, 2/3 free cash flow method, 1/3 earnings per share. And I get a blended value for DocuSign of $48, 48% discount. And again, this is a 2-month-old estimation. So I've updated all that data, and starting with the weighted average cost of capital, I've decreased it. Interest rates have really fallen. And that's why growth companies benefit is if you use a discount rate, a weighted average cost of capital that's lower, it's going to make the valuation go up. I updated cash flows because I believe they're going to do better than I had previously estimated. And that's definitely going to change the forward, cash flows. I kept the growth rate the same, 10%, long-term growth rate, 3%, but it just achieves higher cash flows because I have a higher starting point. So the value of all those cash flows discounted to today's value, again, using a discount rate of 9%, get to $15.8 billion. I add the cash and take away debt, and I get to an equity value of $16.7 billion. The market cap has risen to $12.5 billion. Stock price has risen to $61.54, but it still offers up a nice discount of 26% if you use the free cash flow method. Earnings per share did go up a bit. A lot of analysts are now more optimistic that DocuSign is going to be more profitable than previously thought. So the earnings per share number went up to $2.80. I'm going to keep the PE the same, the growth rate the same, but it calculates a higher value of DocuSign using earnings per share, $66.83. So it provides about a 9% discount using that method. I blend the two, but I put more weight in free cash flow, 2/3 free cash flow, 1/3 earnings per share, and I get to a blended discount of 20%. So I'm a value investor, and I like putting my estimations together that could lead me to make a decision on a stock. And this is probably at the center of my investing decision is, do I think I'm getting a discount? Most definitely, I felt like I was getting a really good discount 2 months ago. I'd already owned DocuSign shares and I bought more. I'm glad I did so because they've done really well. Now at 20%, this isn't enough for me to buy more shares, but the intent with this slide is to show you how this very quickly fulfilled the expectation that I had as a value investor. The stock price has gone up in value. The stock price has gone up in price, and there's private equity and other technology companies that think DocuSign is worth more. So they've been really driving up the price of the stock. So DocuSign has been a really good holding this year, and it's been a good lesson for me as a value investor to go out and find companies that are unappreciated, maybe forgotten, and are undervalued. I think every market, no matter if we're in a bull market, a bear market, every market is going to offer opportunities. It's probably in sectors that are being left behind. In this, for 2023, there have been many companies that are small cap, mid cap stocks that have been left behind. I think that a big part of the S&P's gain has been the Magnificent Seven stocks, big, giant mega caps. And these small mid cap players are now beginning to take off. Over the last 45 days, small mid cap stocks have really outperformed the mega caps. DocuSign being an example of a small mid cap stock. I hope you enjoyed the video on DocuSign, found it interesting. Please leave me a comment. Would love to hear your thoughts on DocuSign, your thoughts on small mid cap stocks, your thought on this particular potential sale of DocuSign. It'd be really interesting to read what you think. Do me a favor and like my video and subscribe to my channel. I'd really appreciate that. Good luck investing and happy holidays.